Want to leave? Want to live at Disney World? Let's make it a realty reality. Everything from Dr. Phillips to Davenport, Claremont to Kissimmee, Winter Garden or Windermere, and Disney's own Celebration and Golden Oak. I'm Realtor Victor Naraki, and this is Disney at your doorstep. Hey everyone, we've already got 3 viewers, so I always appreciate my viewers. Thank you so much for joining. Today we are talking to, hey Alyssa and Neil, how are you? We're going to have our Florida mortgage dude on, and we're going to be talking to him about mortgages and getting a mortgage in Central Florida. I will tell you, the mortgage is like the most important piece of the puzzle to purchasing a home. If you're going cash, it's a totally different animal. But if you've got a mortgage, you've got to talk to your lender first. I always say that because I don't want you to be disappointed. So we're going to introduce Josh in a second. If you have any questions, please ask them here. Oh, T. Marsh, thank you. T. Marsh is here. Hello. If you have any questions, just ask them in the chat. Otherwise, we've got a nice agenda that we're going to talk, and we'll be talking for the next hour. So please ask your questions soon, so I can get to them. Okay, so now I'm going to introduce Josh McPherson. Hey, how are you?
Victor, how are you?
I don't see any Disney stuff in back of you.
Yeah, we got some little like toy trucks back here. We got a couple things, you know. We were actually just at Disney a couple weeks ago with the kids.
Oh, really?
Yeah. We were out there for the day with some family, and it's nice being so close to that to those attractions that we can just kind of go on the off days.
I know.
We went on the Monday after New Year's, and there was like nobody there. It was perfect.
You know, I've been trying to get there. I've canceled 3 park reservations for Epcot, and kept pushing it back and pushing it back. Every time I get a call from a customer, and oh well. But it's nice. It's like you said, it's nice to be able to go. Sometimes I go for a couple of hours.
Right.
I go grab a meal there and go on a ride or 2. You know, have you been on Ratatouille yet?
Not yet. So every time we get a chance to go, we have our kids, and they're pretty young. So we got a 5 and a 4-year-old. So we're still in the Magic Kingdom stage. So we haven't made it out to the big ones yet, the bigger ones yet.
Yeah. Ratatouille, I think, could be a little overwhelming for a little one, but I love it.
Yeah.
I don't understand all the people who don't like it. I'm like, how could you not like this? This is amazing.
Yeah.
It's really amazing. I mean, you really feel like people are reaching for you, and oh gosh, feel like you're getting chased. So, this is the Florida mortgage dude, self-proclaimed Florida mortgage dude.
Yeah.
And you know, I'm going to start off by asking you a really question that I know the answer to, but I want it explained by somebody better. What the heck is underwriting, and why do they find the problems then rather than before?
Right. Underwriting. So underwriters are those kind of mythological creatures that hang out in the lender's bowels. No. Underwriters are an essential part of the mortgage process. So the flow of the process is fairly simple conceptually. So we have loan application to document collection, and then we submit the file to underwriting.
Yes.
So typically we have certain stages with underwriting. And once that underwriter reviews the file, they will issue their loan approval, conditional loan approval. And then we start submitting the other items needed for the clear to close, such as, the survey, the appraisal report, all that stuff. The way the process is supposed to work is the loan officer. So my job is to catch what the underwriter is going to ask for on the front end. So when we do that initial document request, we're getting your letters of explanation, we're getting your bank statements with all pages, we're getting your tax returns, all of those documents. So once it's submitted to the underwriter, they have very little questions or no questions about the process and the document so that we can issue the clear to close more efficiently.
Well, that would have been news to me 12 years ago when I did my first Florida loan.
Yeah.
Because I'm going to tell you, sometimes it doesn't, I feel like with the big box lenders, that's what I call them. The ones that are like, they just work on volume. They don't really care if they don't close a couple. They just care about their overall volume. They're doing pretty good. Okay, great. 9 out of 10 make it. But what I find is they don't get the information correctly.
Correct.
They don't get their background. They don't follow. They don't really clear the person to be eligible for a loan.
Correct.
And that's why when I submit something, like I have one where we're going to be using a big box, even though I gave him a bunch of names, but the reason being that he works for an affiliate of that company. So I'm going to have to explain that, so to them. And I told them, I said, I'm going to have to explain it to them just because they're going to wonder why I'm using this company.
Right.
And I did call them and they answered the phone. So I was happy about that. I mean, usually they never do. So, but I find that that's what it is. It's just a matter of making sure the person's eligible and following through. And the big ones don't do that.
They don't. So if you take a look at a company like, we'll just say Rocket Mortgage is probably the most notorious for that. And maybe the company you're working for or with. What they do with their pre-quals is they say, okay, Mr. Customer, how much money do you make? What's your credit score? Great, you're pre-approved. And they don't do the due diligence of running through the loan application, running the credit report, and getting those documents up front to see if they're really approved. And there is a key difference in a pre-approval and a pre-qualification. So if you have a client who is pre-approved, they've actually already had their documents reviewed by an underwriter. Okay. So the underwriter's already issued that conditional loan approval on the file, and they're waiting for a property to write the mortgage on. Now, if you have a pre-qualification, that's kind of where it gets a little gray, because I can do both. 99% of the time I'll do a pre-qual, but the pre-qual is basically you're relying on that loan officer to do their job. As the loan officer, we are supposed to look at these documents, review them, and look at, run the credit, make sure they've been at their job for an acceptable amount of time, make sure they can either work remotely if they're moving here from out of state. All of those key questions, we have to get that up front. And when you work with a larger company, we call them mortgage mills. They don't tend to do that.
That's a better word than big box.
Yeah, they're turning volume. So, and if it doesn't work out, the big difference between me and that mortgage mill is that I have to see that customer because they're going to live, work, and play in the community I live in. So if I'm getting a bad reputation from writing these bogus pre-qual letters, my business won't survive. And that's, I think, the big difference between using somebody like me. So I'm a mortgage broker. I work at a company called American Home Mortgage. Yes. We're a local company. So whenever you do a loan with us, you're working with me. You're not working with a floor or a call center and getting passed around. When you call to get an update, which you shouldn't have to do if you're working with a good loan officer, you should be getting updates. You're going to be talking with me or my loan partner. So we keep it small. We keep it, now we do a lot of volume. So we do get busy, but we always answer our calls because that is the key, I feel like, to the whole process is communicating with not only the borrowers, but also the real estate agents and title companies.
I know when I first bought my first house out here, I was dealing with, and I don't know why, I was dealing with Bank of America for some reason. And, they really, for lack of a better word, screwed me over as far as they weren't ready to close on time. And that's, I find, is so appalling. But now I know what to tell people, as far as knowing when you're ready, because
Mhm.
I did what every buyer does. I got in the plane and wanted to be there for closing. Yeah.
Yeah, rearrange your life,
Boom.
yeah, to make it happen, right?
Oh, don't do that. I ended up spending all Martin Luther King weekend unable to get into the house and having to pay for a hotel.
Oh, man.
It was
Wow.
really, yeah, it was not good. Oh, here's Tom Dougherty is watching. So terrific.
Hey,
Okay.
hey, Tom.
Okay. So the average buyer, there's usually requested that put 20% down.
Mhm,
And one thing that I think is great about lenders, and I really didn't realize that you guys did this until I really got into, you know, being a what am I? A realtor? Yes, is that when you tell them how much they're going to have to bring to
yeah,
closing.
mhm,
I mean, it is so, and you've all done a very good job with that.
mhm,
Um, But I don't think people realize how much closing costs there are because you have your prepays, you have
mhm,
your title, your insurance, and like, 1 year of taxes,
mhm.
and then all the closing costs that usually is another 2%. So you could be bringing like 6%, right, to closing?
We Yeah, it's pretty close. So we normally estimate about 3% on the average for closing costs. Could be a little more, a little less, but
Does
you're
that
right.
include the prepays?
Yes,
Oh, okay,
yes,
good.
yes. So
That's why
we
you never ask a realtor how much they're gonna have to bring to closing.
well, it's good to overestimate than under, right?
Yeah, it is, yeah. And
Yeah,
then the
so
20, so what opportunities are there for people who don't have that 20% down?
there's a lot of opportunity. Even if you're buying a second home, you don't have to have 20% down. So
Okay.
if you start obviously with a VA loan and with USDA loans, those are 0% down programs. So we won't really be able to take advantage of USDA loans. Those are like rural area loans. So Orlando is not
I
really
do
the
see them sometimes listed, on the listing, yeah,
yeah. So there's very few properties.
sometimes.
Yeah, very few properties. But I mean, it's available. So FHA, they're going to have a minimum of a 3.5% down payment.
Yes,
Now, you can put more down and could potentially get a better mortgage insurance rate, but any FHA loan that you're going to have mortgage insurance.
yes.
So that's always something to keep in mind. And you cannot do a second home purchase or investment
Now,
property.
mortgage insurance, you mean like we call it PMI?
PMI, yes,
Yes, okay.
yes. And
And
then,
that
and
and that's because you have less than 20% down.
yes, well, even if so let's say you put 30% down on an FHA
Sure.
loan, which there's very few scenarios where that makes sense because FHA loans are a lot more flexible. So
Mhm.
they'll do a lower credit score or a higher debt to income ratio. So you may be able to do a larger down payment on an FHA loan, but still be required to make those mortgage insurance payments because FHA, no matter what, you have to pay mortgage insurance.
You know
Uh,
what? When we everything was collapsing in 2008, I remember
mhm.
talking to a realtor, and they said, and they were going, "What? They're taking mortgage insurance from people. Where the hell did that go? If
Right?
this, it's sort of like you're paying insurance. It's sort of like the most useless insurance I've ever seen.
Yeah.
Because
It's
what
yeah.
does it do for you other than have you put less down? But it never made any sense to me, PMI, so I always say, "Go out of your way not to pay it."
Right, right. So the mortgage insurance is it's not a benefit to the borrower at all. It is a benefit to the lender because it protects their investment.
Yeah.
So you pay for their insurance policy on their mortgage on your property. It's like it's to protect the lender's investment.
And then
So
what happened to that when everything collapsed?
or
That's
they
what I
could
don't
still
understand.
foreclose on the property. Like they could still, yeah, they
Still
could
for
still do
They
short
still
sales.
foreclose. Do they collect on those insurance policies? That's what I don't
I'm sure
understand
they
what
would.
happened.
I'm sure, back then there were so many foreclosures and there was so much going on. That market probably busted. But now I think that we have so many regulations in place that if, you have that rare outlier that does need the insurance policy, that would kick in. They would have the funds to make that happen. But then to touch on conventional loans, so you
Yes.
can actually do 3% down payment for a primary residence if you're a first-time home buyer on conventional loans. Now, if you're buying a second home, you can do a minimum down payment of 10% down. And we use this strategy quite a bit when we're working with borrowers from out of state. So, let's say you live in, Ohio, and, you're getting ready to retire, or maybe you want to move down here and you're not quite ready to leave yet, but you make enough money to pay for the primary residence and the second home. Well, we can do the second home purchase with the 10% down. And then when you move and you sell the house in Ohio, you can actually do what's called a recast program.
Yes.
And then you can drop the mortgage insurance and re-amortize your payment over whatever the remainder of the loan term is.
So you don't have to say, I've got a home to sell, right?
Right.
You just say, I'm buying it. We've got our loan approved. Okay, cool.
Yeah. And then you have the strength of
learning.
going in with that non-contingent offer, which everybody wants to see.
Nobody, yeah, I know. I think my recent sale that you worked on, I
Mhm.
think that's why we beat out the other people, because we didn't have any contingencies on selling a property first.
Yes.
Yeah.
Yes. And for those out there who don't know, a non-contingent sale or non-contingent offer is when you don't have to sell a piece of real estate to purchase a piece of real estate.
Yeah.
So there's a lot of risk involved with a contingent offer because the deal could fall apart with
At the
home that you're selling.
and you know what? And they could fall apart at the very, very last
Yep.
day. And it's what
Yep.
absolutely drives me crazy, is that I'm here sweating that a sale in Massachusetts is going to go through.
Yeah.
And then somebody somewhere tells my customer, oh, and you can do a same day closing.
It is
yeah, we're all
possible.
going to be, and I'm like going, are you out of your freaking mind? You want two lenders to come through on the same day. That's great. I think that's really, yeah, that's not going to happen. It usually doesn't.
No,
So,
it's a rarity, but it does happen. It does happen.
So, let me talk to you about FHA loans, not
Yeah.
FHA, VA loans for a second.
Okay. Yeah.
Because I do get a lot of questions about them, and I honestly, to be honest with you, I try not, a little knowledge is a dangerous thing.
Yeah.
I try not to answer questions,
Okay.
but when the buyer comes back to me and says, oh, they said this, I can verify, yes, that's correct.
Mhm.
Because honestly, it's like, I don't want you to tell them what you can get for $450 in this area.
Yeah. Yep.
Because I've had that happen.
Mhm.
So, now, what are the benefits for a VA lender? Because I think I hear the program is really terrific for them, and they deserve
Yes.
it. So
VA loan has a couple of features that are phenomenal for the borrower. One, they have a zero down option.
Mhm.
They have
Yeah.
no monthly mortgage insurance, and they are very competitive with their interest rate.
Good.
So even if they're putting 0% down, the rates are so low that it kind of offsets that additional cost of having a higher loan amount. Now, there are some drawbacks with VA loans that everybody needs to be aware of, but it doesn't necessarily make it a more difficult loan program. You just have to understand the inner workings of the VA loan. So at the core, the VA loans are built around protecting the borrower. So they have some extra inspections we have to be aware of.
Yes.
They do, if you're on well and septic, you have to do a water test, and they test for, bacteria. They test for water pressure.
I never heard that one. Well,
Yes.
we don't have a lot of well and septic.
You don't have, yeah, very true. And then they have what's called a WDO inspection, which is a wood destroying organism. So
we don't usually do that. Yeah.
Yeah. So that has to be done every single deal. And then their appraisals, they actually have specialized VA appraisers that go out to inspect properties. And the VA appraisers actually look a little closer at the property condition. while a lender doesn't necessarily need or ever get an inspection report of the property condition, the VA appraiser, I've actually had an appraiser come back subject to repairs, where if you have an appraisal done, you can either get two forms. You can get like it's appraised as is, which means nothing needs to be fixed, or you can get subject to repairs, which means, outlets need to be put on, outlet covers need to be put on the wall, or there's a roof leak. This one, which threw me for a loop, there were some tiny hairline cracks in the stucco, which in Florida is pretty normal.
Yes, very normal.
We're all, built up on a big old swamp over here in Florida.
Yeah.
But so the repair was to, grind it out, fill it with a sealer, and then repaint. But on a normal conventional or FHA inspection, that would not have been flagged at all. But because it was a VA, that inspector flagged that particular repair, and they had a home inspector go out and say that was totally normal settling of the property.
Yeah.
So there's just some extra things we have to be aware of. But I mean, if you do have a good pre-qualification, you should have no challenges and no issues getting them done.
Well, those little things that you're talking about are a lot of the reasons why a lot of sellers don't want to deal with VA. And I think that is what, I mean, that's just like, so there should, I wish there was another way to figure it out rather than putting the onus on the seller to fix these things. That's not something they would normally fix.
Right.
So
right.
I've sold many homes that have the hairline cracks, and I say, listen, you've got to seal and paint that within the next year or two, and it's left at that. So for, I think that's where the VA loan sort of cut short some of the buyers, because the sellers weren't even interested. I see it a lot, and they could reject an offer for any reason. And one of the reasons they could reject it is it's a VA loan. So there's also a lot of stigma that the sellers have to pay more when they get a VA loan. Is that true?
So to a point, but it's not an extreme.
Okay.
So that WDO inspection I was referring to, that actually has to be paid by someone other than the borrower or the veteran. So if that's a $250 inspection, it has to be either paid by the agents or
I'm sorry. I just like, this is show you how long it's been since I've done a VA. That is one of the things that boggles my mind.
Yeah.
What am I'm going to pay? Now, I will tell you that when I work with the seller, I say the best thing you could do is have a home inspection before you sell it.
Absolutely.
So that you have a crystal clean, perfect property that nobody sees lights flashing. And if you have a wood destroying organisms certificate that's clean, people go, oh, wow. Because they think we have all bugs here. Everything's rotten away at the wood. Yeah. But anyway, okay, so I'll let you continue. That it does boggle my mind that someone else has to pay that,
Yeah. So, but at the end of the day, it's a nominal cost. So, I mean, if they're selling a home for $400,000 or $500,000, $250 inspections not going to make or break you, because they already have seller paid closing costs they have to take care of. But other than that, I mean, it's really no additional cost other than any repairs that might need to be made. And the inspections and appraisals that I've seen, they're really, if I see one that has repairs that need to be made, it makes a lot of sense, that those repairs need to be made, even if it's an FHA or a conventional loan.
Okay, the Curtis family has a great question. Are secondary home loan rates affected by primary home? And what do you look at with a second home loan?
So whenever we look at a second home loan compared to a primary resident, you're not really going to see a huge rate difference between those two products. You may see like 1/8 of a point difference in interest rate at most. The ones that I've priced out, sometimes I'll run both scenarios side by side, and we'll see that the secondary home really isn't much different in rate. Now, I've actually done secondary home loans, where the borrower has no primary residence. They don't own a primary residence. and they actually could potentially live rent free. So let's say
Yes,
that
I've had that.
you live with a significant other or a domestic partner, and you're not married, you have no ownership rights to the property you're staying in, but you don't pay any bills.
Mhm.
So you live technically rent free. So we don't have to count a primary housing expense against your debt to income ratio,
Good.
which makes it easier to do the second home purchase. And the real big difference with second home purchases are we look at a couple of different things. We look at how close that property is to your primary residence.
Okay.
It can't be too close to your primary residence unless there's a significant like scenery change. So let's say you live in Orlando, but you want to buy a house in Cocoa Beach that's right on the beach. That might be within that geographical footprint where we couldn't do the loan, but it's a beach house. So there's your significant geographical change.
Okay.
And then the other big thing with second homes are the down payment requirements. So your minimum down payment is going to be 10%. But if you have good credit and you don't have a lot of like a high debt to income ratio, you're actually going to have really competitive mortgage insurance rates on second homes. So
Wow.
there's a lot of benefits to doing a second home loan as opposed
Is that because
to,
you have the equity in the first home?
so mortgage insurance on the secondary homes and conventional loans and primary residence are based on your credit score.
Okay.
So FHA is just a flat rate. But if you have a really good credit score, you could have a low down payment program which requires mortgage insurance. But I mean, I've seen some like I've run scenarios where we have like a $300,000 purchase, 5% down, and the borrower's mortgage insurance was $45 a month.
Oh, okay.
But they had 810 credit score.
And then, like you're saying, if their true intention is to relocate and then sell that home, which I've seen a lot of people do, where they'll say
Yeah.
they won't tell the lender the truth.
I don't hear anything. I don't know what you're talking
but they
about.
won't because they don't want them to know that they're retiring,
Right.
and they don't want to prove that they're going to be making a pension because they don't have it yet. So they go and they buy a second home. They do what you're saying, put 10% down. Then they sell that property. And then they do the one-time recast. So I've honestly seen that happen quite a few times.
I don't know what you're talking about. No, so I do see that as well. And it's not that it's not advisable. Whenever you're purchasing a piece of real estate and you're getting a mortgage, the lender they want to know the intent with that property. If you intend to occupy that property as a second home and then you make life changes later, it's not like they're going to come back and say, hey, well, you said this was going to be your second home, but now it's your primary. They really only have an issue with that if you're like, I'm going to buy this as my primary residence, and now you're renting it out. So you can't do that. That's like
I will tell you,
I have seen it done before.
I've seen it done, and yes, it is something that is something that really I've had to basically, I was given the wrong information before I got into this industry. So it's not something that really you would advise doing to people. Yeah.
So it's pretty risky because on the borrower's end, if you were to get caught, let's say you were going to occupy the property as your primary residence, and then you turn around and immediately rented it out.
Sure.
That's occupancy fraud. And if the lender finds out, they can call that loan due. So you would have to either sell the house or pay off the lender for what you owe on the house.
Yeah, don't do that. Okay.
So it's not about now. Granted, if you buy the house and you live in it for a year, maybe 2 years, and then you purchase another property, move into that, and rent out your original home, that is completely acceptable. But normally we see like 12 months is about the threshold of that occupancy requirement.
Okay.
Sorry if you hear my dinging over here.
Oh, it's you. I'm thinking, like, what the hell's going on? Anyway,
Sorry.
so, okay. Here's a good question from Rebecca Pebbles. Do all closing costs come out of the sale of the house, or do you, okay, let me see if I got that. Do all closing costs come out of the sale of the home, or do you pay out of pocket at closing?
So,
I think you got it, right?
Yeah. So let's say as a seller, you have what's called seller paid closing costs. So typically in Florida, whenever you designate a title company and you choose who's going to do the closing, you're actually going to pay for the buyer's owner's title policy, and
Mhm.
you're going to pay for your portion of the property taxes for the portion of the year that you own that property.
Yes.
So those closing costs will vary a little bit unless you agree to pay the buyer's closing costs, which again are about 3% of the sales price on a rough estimate. So what
Yeah,
you
you
could
wouldn't do
do
that.
is, yeah, we sometimes we see it happen, but we
Not in
can
this market.
estimate. Yeah, it's the market's so competitive right now that it's almost like you don't really see seller paid closing costs or seller paid concessions.
You sellers, yes, sellers will not, there's no concession. I have to write in my contract, no concessions. Yeah, there's nothing like that right now. So yeah, so do all the closing costs come out of the sale though? I'm gonna pay out of pocket closing as the seller. Yeah. But you still, yeah. I mean, at the closing, they're paying for they pay for title. Buyer pays for title insurance, right?
So the buyer actually pays for the lender's title policy.
Yeah.
There's two
Yeah.
title insurance policies.
Oh,
So
okay.
your title insurance is going to be basically guaranteeing that no other company has a lien on your property. So
Yes.
like after you purchase a property, you can't have like Joe's construction company come in and say, "Hey, we had a lien on this property. You owe us 50 grand." So the
Yeah.
title insurance protects you from anything like that. So there's a lender's title policy, which the buyer pays for the lender. And
Yep.
then it's just usually customary that the seller pays for the owner's title policy, just kind of good faith that, hey, I don't have any liens out on this property that you don't know about. And then they can move on with that. But
Which
normally we say about 1 to 1.5% of the sales price would be an estimate on what the sellers would pay for their portion of closing costs.
yeah, that sounds right. Yeah. Okay, so we went over FVA. Anybody else have any more questions? Anything else? Go ahead and ask. What happens with people? Because we do have a lot of people who, over the pandemic time, maybe had job insecurity, maybe their credit scores went down. What type of opportunities are there for them?
So actually, I'm glad you bring that up because we're starting to see lenders accept lower credit score borrowers again.
Okay.
When 2020 hit, we had the federal guidelines did not change for minimum credit score requirements. So, Fannie Mae and Freddie Mac, they still offered a 620 credit score, conventional loans, and the Housing and Urban Development or HUD still offered 580 down to 550 credit score programs. So what we saw was the lenders looked at all that and said, that's nice, but all these people are losing their jobs. We're in this pandemic, so we're going to up our minimum credit score requirements. So a lot of lenders put in place a minimum of a 640 or 680 credit score to be able to do a loan. And slowly over the last 2 years, we've seen that work down. And I actually priced out a 590 FHA loan, and I had multiple lenders that were willing to do the deal, and the rate wasn't terrible. So that means they're getting more comfortable with borrowers who have lower credit score. But we're still not 100% back to where we were pre-pandemic.
Yeah. Wow. Yeah. So, okay, we got a couple more questions.
Okay.
This one might be more for me. Do you need to use a lawyer as a buyer in Florida to close a sale? The quick answer is no, you don't. And with the over 100 sales that I've done, only one has used a lawyer, and that guy was a lawyer himself.
Funny.
So now here's the thing. I think if you want to get a lawyer, get one before you make the sale. And what I would say to do is have them explain the contracts to you, because I cannot legally explain a contract to you. These are 12-page contracts that are all exactly the same. I just fill in the information. I love the system we have here, because the systems that I see in New York and New Jersey, where they use lawyers, drive me out of my mind, because they don't really close on time because everybody's getting involved in nitpicking. But no, you don't. But if you did, don't let it hold back putting in the offer, because right now offers have to be in the day you see the home, and that's it. And you can't do that when you have a lawyer going to review the contract, and lawyers always tell me they need 2 weeks. So if you want to go over a contract, if I usually, when I go over a contract with someone, I usually say, what do you think it means? And they say this, and I say, yes, that is correct.
Yeah.
Because they're actually really clearly spelled out. And you just want to make sure that there's always little ways to protect yourself, but you have to look at the dates, like, you have 10 days for inspection. And that doesn't mean you go and have the inspection on the 10th day,
Right.
but anyway, so,
well,
now
also too, the state of Florida, they're actually, the sales contract actually are more so to protect the buyer and to protect their escrow deposit more so than the seller. At least that's what I've seen.
I say the same thing. And the new contracts that we use, they used to have another contract, which we all refer to as the regular contract, where they would say, if it needs 1.5% of the value of the home in repairs, we're still in contract. I have never done one of those. I've only gotten one once when I was representing a seller, and I rejected it immediately, and said, no, come back with an as is, because here's the thing. What if that house has mold?
Right.
And you find mold in the house. Are you going to say, oh yeah, we're still going to buy it? No, I don't care who fixes the mold. We're not buying the darn house.
Right.
So that's what's great about it. As is contract, you can walk away for any reason within that period, but don't have that period start on the 9th day.
You want to have time to think about it.
You want to, yeah. I mean, because sometimes these things need to be explained. Okay, here we got another one. With the market being crazy, it's still possible to purchase out of state. By the time we flew down to see the market we like, maybe it would already be gone under contract. First of all, get your loan approved before you fly down. It is the most, I cannot believe how many people fly down and don't have a loan approved and then want me to show property to them when it's going to take me 2 to 3 days to get the loan approved, or sometimes less. So get that loan approved, but don't come down to see just one house.
Right. Because it's probably going to be gone.
In this market, it is. It used to be that the nicest houses in the world would be on the market for 200 days. And that was commonplace. Yeah, it doesn't happen anymore. So now we have the Curtis family. So if you buy a home out of state to use as an Airbnb, yes, that's a great question.
Okay.
So an income property.
Yes. So she would be looking to purchase a property in Florida as an Airbnb. That's the way I understand the question.
Yes.
So this would actually have a big change in the loan requirement. So now we're moving into an investment property loan. So we can still do a relatively low down payment investment property loan at 15% down, but that will have mortgage insurance. Now, anytime you move into investment properties, think of income producing. So it's not your primary residence, and it's not a second home for personal use. So now the lenders kind of changed the game a little bit. Their rates are going to be higher. The mortgage insurance, if you have that on that property, is going to be higher. They're going to be a little more strict with their debt to income ratio requirements. And if you buy let's say you purchase a multi-unit property, because you can still purchase up to 4 units on an investment property or primary residence. They actually changed that minimum down payment requirement to 25%. So you can either do 15% on a single family home, or it jumps all the way up to 25% right away if you do 2 units or more.
Well, this is where I always have, I always question the logic, because I'm thinking a regular house doesn't have any income.
Right.
Why are you charging me more for a house that I'm going to get paid to rent to share with people? I'm getting money coming in.
Right.
But
But
they
that's
never know
why is
how much.
because you have the income from the property, they say, "Oh, they can afford it. We'll just charge them 6% interest or something." I don't know if that's the rate, but something like that.
Yeah, how much?
Another thing to note about investment properties is you can actually sign a long-term lease agreement and count 75% of the total rent received towards that monthly housing payment. So if your debt to income ratio is tight, you can actually use the future income from that property to go towards that mortgage payment.
So if you have a tenant in place already, that's
Yes.
being and the property is being okay, that's interesting. So you have it,
Yes.
but an Airbnb would never have
So that
that.
would be, yes. So that would be short-term rental. So that we would have to see 12 months of history. Actually, I'm sorry, 2 years of history of that type of income because it's considered variable.
Oh my
But if
God.
you if you need the debt to income ratio, uh,
That would really give me a headache. Yeah.
yeah,
So
yeah.
that's why you get a lot of people pretending that they're going to use it as a second home.
Yeah. Another thing, if you're buying a property and intend to use it as an Airbnb, please do your due diligence and make sure that that is a qualified Airbnb area.
Mm.
The area that I live in is a very small town on the beach. It's Flagler Beach, and you think it's the perfect spot for Airbnbs, but outside of our little downtown district, it's actually prohibited. And if you're caught, it's some pretty major tax implications, and they have all
Oh yeah,
kinds of.
but you have to get a license when you apply when you get a rental property here. So
Yes.
and the only places that have short-term rental in this area are in Kissimmee, Davenport, and Claremont.
Mhm.
And then the individual community has to approve it. And then I have heard that some communities um, they've changed the policy and you go, oh well, they have there's other you know um Airbnbs here, but they were grandfathered in.
Right.
So that's why it's so important to look over the HOA docs.
Mhm.
And like new construction ones, they give it to you right away. HOA docs, I can't
Right.
believe how difficult they don't even respond to the phone calls. Okay,
Mhm.
so when contacted the insurance company for my purchase, the first question they asked is if I was going to use it as an Airbnb. You may want to shop for insurance providers. Yes,
That's a great point.
that's a good point. I have a good recommendation. Um, yeah, and that's where you could get caught too, because you
Mhm.
go and go and get insurance on the property, and you say it's going to be a short-term rental, and then you and then you're telling a lender a totally different story.
Mhm.
So
So we'll
yeah,
we'll look at it the same, like it doesn't matter if you use it as a short-term rental or long-term. But now if you say that it's a long-term rental to an insurance company and, heaven forbid something happened to that property or one of the tenants are injured, well, you might not have your insurance coverage because you didn't disclose that it was a short-term rental property.
yeah,
So that's
you got
definitely a great point. You want to be transparent about what you're doing with the property. And when you work with like a loan officer like myself, I'm insulated from the lenders. So I'm a broker and I work with a network of lenders. So we can work together to figure out what's going to be the best route for that purchase. And then, like Victor said, we have contacts too where you could reach out to them to discuss what are the insurance implications. But at the forefront of all this, if you find a property and you like it, put the offer in because it might not be there by the time we get answers.
well, I know I have had so many. Um, I had a customer come into town and we had 4 properties to look at. By the time they had their loan approved, because they were higher than a million, they don't let you go in unless you have proof available that
Mhm.
they really insist that you have the loan, because they don't want to bother their
Right.
their sellers, that you have a loan approval. Um, so I couldn't even get in to see the properties without that. Usually I can
Mhm.
fudge it, a little. I
Yeah,
say, okay, you've talked to Josh. Okay, he says everything's working. Let's go. Maybe we'll have it by the end of the day. But
right.
by the time she got it all finished up, they were all sold.
Wow.
All 4 of them, all beautiful. And now they're up by $200,000 each. I mean, really, the prices are just going up
Yes.
crazy each time. So you have to get that loan approval before you get on the flight.
Yes.
Okay. So we've got, let me see if I think I got another question here. Do you have any other? Okay, wait. Oh, you went by the Tom is saying that he went by the house. Tom, did you notice what they're building right in the next like parking lot? That looks like an Aldi to me. I'm like, I
Oh,
would
that's
love
handy.
to be able to walk to an Aldi.
Yeah.
Because for me, even living here, it's a 10-minute drive to the grocery store.
Right.
You know, and he's got a Publix across the street. Oh, it's awesome.
Perfect.
Great, great location.
So, Tom, did you bring that cold weather down with you?
Yeah.
It's been cold and dreary for the last 4 days down here. It's going to warm up soon, though.
I hope so, because I want the strawberry festival. I love to go to
Oh,
the
yeah.
So before we get into your must do's and don'ts,
Yes.
any other suggestions, things that loan packages that might help some of my buyers?
Yes. So actually, we've been recently approved with the state to be able to participate in their state housing initiative program, deemed the SHIP program. This is a down payment assistance program that's run through each individual county. And as long as funds are available, you have to do a separate loan application with the county to be approved for these funds. But we can actually use those towards the down payment and closing costs of the properties. So for more information, you have to visit your housing authority or the county that you want to live in, their housing authority website to see who's the point of contact, to see if they have funds and what the application process is. It's done independently of my application, but that's always something good and handy to have if you're buying a primary residence. And also in 2022, we have new loan maximums for conventional and FHA loans. So if you're buying a house with a VA loan, there's actually no loan maximum. So you can buy a $3, $4, $5 million property and not have to have any loan maximums in place. Now, if you're doing a conventional loan purchase, the loan max is up to $647,200.
Okay.
Now that's the loan amount, not the purchase price. So if you're doing 20% down, that's going to put you at about an $830 purchase price.
Okay.
And FHA, they're up to about $480,000 now with their loan max. So if you're doing a 3.5% down FHA, you're looking at about a $500,000 purchase price, somewhere in that area.
Now, what qualifies someone for an FHA loan?
So FHA is actually really flexible. They're more flexible with the debt to income ratio. They offer a great low down payment program. And the cool thing about FHA loans is you can actually buy a multi-unit property, because keep in mind, FHA can only be a primary residence. So let's say you find a nice fourplex and you want
wish they had those here.
Yeah, right.
I really wish we did.
Yeah.
I get so many requests for duplexes and fourplexes. I got none of them.
Yeah.
Anyway, go on.
So if you were to buy a fourplex, that property is going to be so expensive compared to all the other ones. Let me just mute this guy. Sorry, I have my messengers on my desktop.
Sure.
I got to mute each individual text. But so what they do is they actually have loan maximums per unit. So it starts about 420 as the loan max for FHA for a single unit, and then it goes all the way up to about 980,000 for a 4-unit complex. So depending on how many units you're buying, and we can also use the rental income produced from the other units to go towards the housing costs. So
that's cool.
So new loan maximums for the year. And I will say, it's probably more so for you, Victor. We do have some new guidelines coming out for condo purchases. It's going to be a little more difficult to do condos. They're actually requiring, I don't think it's implemented yet, but they're going to be requiring 6 months of meeting minutes from the condo association. And they're going to actually send a condo questionnaire to the insurance provider. So Victor's gone. He's out of here. So not the best thing, but
Oh man.
yeah.
Oh,
That just came out like last week. So
oh, that drives me insane.
so
See, well, the
it's
thing is with condos, people don't understand. See, the way I describe it is you're buying into a business
mhm.
because you don't own the land underneath the unit.
Yes.
They have, and they do it ass backwards too.
Mhm.
They You do your inspection, they do your appraisal, both things you have to pay for, and then they do that damn condo questionnaire
Yeah.
at the end.
Yep. So we
At
try to request
the
it up
last,
front.
and they get it in
Mhm.
like the last week, and you're like,
Right.
and then they say, "Oh, by the way, there's a lawsuit against the condominium board. We're out."
Yeah, we're done.
And you're
That
like,
does happen. So we try to request that up front,
"Good."
but we're relying on the condo association to fill that out. So there's been times where we requested in the first couple of days of submission,
Well, that's good.
and 3 weeks later we get the condo questionnaire back, and it's this property's under litigation, or there's one person owns too many rental units in the property. So there's always a little bit of a risk when you're buying a
I had
condominium.
I had both those scenarios.
Mhm.
In Celebration, this entire condo development was under litigation because of the roof, and they finally settled it after, I think, 11 years.
Oh my goodness.
So the property values were dropping because they couldn't sell it to anybody with a loan.
Right.
Nobody would get their loans approved unless they paid exorbitant rates.
Mhm.
So if you had cash, it was a good opportunity to sneak in there and get something for 200 that's now worth 400.
Mhm.
And my cat is
Yeah.
such a good kitty. And the what was the other one? Oh, and then I had another one where they had a this is like the big one around here, where they had a rental office
Mhm.
on property.
Oh, so it was a condotel.
It but not really.
Okay.
I
Okay.
mean, they did have a they had some that were owned by, like I said, a lot of the same people, and then they'd
Yeah.
have a rental office on property, but all the other ones were individually owned. And
Interesting.
we had it this was like, and I was like, I will honestly say I was trying to tell these people, do not, now I say, do not buy in there unless you're cash. Don't,
Right. Right.
because you're going to go through hell, but or it's going to be very difficult. You just have to, go through all this stuff. But man, those were a nightmare.
Yeah. Yeah.
Those
That
are a nightmare, and you don't know until, and honestly, and I was new when all this was happening. So, and it was a time where you could buy these things for nothing.
right.
But then you wouldn't get your loan approved.
Mhm.
So,
Yeah, so it's gonna be a little harder to get in those now, but,
oh,
I
even
actually have,
harder. Thank you.
yeah, I got one in process right now. I got that curveball, so I'll keep you posted on that one.
Well, here's the difference. That's why I always say to people, go to a townhome.
Yeah, you can actually do FHA loans on townhomes as well.
Exactly.
You can't do
Townhomes, you
FHA
own the
loans.
land.
Mhm.
And even if the association is under a lawsuit, would that come up?
Nope. No, because they don't have an association review. Because
Isn't that
the
see, that's
only
why I tell people you
yeah.
don't know how different it is to buy a townhome over a condo.
Right, right. Normally, like 9 times out of 10, any litigation with a condo is gonna be from, like you said, like roof repair, roof damage, or and it's pretty customary. We have a huge complex here. It's been under litigation since it's been open, but it's all they say it's pretty standard practice.
Okay, I'm so thankful you informed us of the difference between condos and townhomes before we purchased. We ruled out condos right away after that. Yes.
You're also gonna pay like triple in homeowners association dues
Well, you know what? And the
for some of
reason
them.
for the higher association dues is because they have to pay higher. They have to pay business insurance.
Yes.
So you're paying for the insurance and everything too. I just loved townhomes. I would sell a townhome any day. I haven't sold a condo in a while, unless it's a really good deal,
Yeah. Yeah.
So anyway, okay, so now let's get into the thing that you emailed me, all the top must do's and not do's. Okay.
Right. Right.
Okay, so when you're getting a loan, do not change jobs or become self-employed. If a new job is presented, please discuss with Josh.
Yes.
This comes up a lot,
It really
that
does. I've
people don't realize that yeah, you don't change job. What if they change
Oh,
what I think it's more isn't it more if they change careers? What if they change jobs and
well,
get an increase?
so actually, we actually had a client together. They moved from the Midwest, I think, Idaho, and they were buying a home in Florida.
Oh gosh,
Uh,
yes.
and
Thank
actually,
you for not telling me any of that because I would have had a nervous breakdown.
I told you after we took care of it.
That's what I like to hear after it's
Yeah,
all done.
yeah. It's not like, oh man, fire drill. It's like this happened. We got
Yeah,
it
I
done.
can't
It's
do if
fine.
I can't do anything about it, I don't want to know about
Yeah.
it.
So we borrower was moving here. He was in the IT industry.
Yes.
Had a job with in actually with like NASA or something like that. One of those institutions.
Mhm.
Got a He worked remotely at his facility in the Midwest. When he realized he was moving here, he started making calls to like Kennedy Space Center, started kind of putting his feelers out, and actually landed a better job that paid more at the Kennedy Space Center. So he didn't tell me he took the job and he made the switch. So I was like, hey man, can you send me an updated pay stub and then we can finalize everything? And he sent it to me and it was a different employer. And I was like, what's this? He was like, oh, this is my first check for my new job.
Oh my
And
god.
I was like, what? So the new rules with COVID are we can't accept offer letters anymore. We used to be able to if your employer was like, Johnny's going to make 85 grand a year doing this, and here are his benefits, we could accept that before you even received your first check. But now we have to wait 30 days before we can count that income. So you need to be there for more than 30 days because you need 30 days of pay stubs.
Okay.
But thankfully, we had a very long closing window, and he made the switch right at the beginning.
Because
And we
I
got
will
it done.
and I will tell you those buyers were kicking themselves for selling the home. They
Yeah,
would have loved to get out of the deal.
yeah,
So, yeah.
that was a very very nice
That was a
property.
that was a great price that they got.
Yeah.
They put in an offer that was only like a few $1,000s over asking price.
Hmm.
Um, they had solar panels on the roof, and the selling agent was so smart, she didn't even mention to me that those were, um, they didn't they were those were on a loan as well.
Yes.
So and they paid them off at closing.
Awesome.
Because honestly, I think it would have been a nightmare if they weren't, now they've got like $15 electric bills
Yeah.
and an electric car.
Yeah. Oh, that's awesome.
So anyway, so we go to the next one. Um, do not buy or finance a car, truck, motorcycle, boat, RV, or any type of vehicle. Yes.
Yeah. So you're gonna see a trend with each one of these. I'm gonna have a story.
Okay.
So my first loan that I did, I was totally green. The borrower leased a car for every member of her family. So mom, dad, and both kids all got brand new cars. It was the biggest nightmare that it
Oh my
because we have
God.
to get because you don't have statements yet. You don't have payment plan. You have to get all the dealer docs and you have to provide those to me so we can add them to your credit report and order a credit supplement with our credit provider. And then it actually costs you more money because every time we do a supplement, it adds to the cost
Oh
of the
Lord.
credit report. So it's very difficult to sometimes to obtain those documents. So normally, whenever we're in the process, it's like, hey, just don't move money, don't buy anything. If you're thinking about it, just wait till the loan closes, and then you could do whatever you want. You just don't want
The
to jeopardize.
day of closing,
Mhm.
you could do whatever you want.
Do whatever you want.
Well,
But
I know I had a customer whose car got totaled, and I told them, "You're going to rent for the next 3 weeks a
yeah,
car. You're not
yeah,
buying anything,"
yeah,
because they had that one paid off and blah blah blah. And I'm like, "No, just rent."
Just rent, because we're
Just
going to have
rent
to add that
for
to your
3
debt to income
weeks.
ratio.
You're gonna thank me.
Yep.
And yeah, so theirs went through and they anyway.
Mhm.
So do not make a substantial credit card purchase, open new credit accounts, or let payments fall behind. Ooh, I got a story that I was told when I was in my classes of a woman who got all excited about buying her house and bought all her furniture at Walmart. And now that and for a couple of years, that furniture was stuck in her mother's garage.
Oh, yeah.
Yeah.
Yep.
So yeah, don't change your debt to income ratio.
Right. And as soon as the lender's going to see, as soon as they see a late pay, that's going to throw a red flag, because that's an indicator for financial trouble. I had a borrower, we had to remove him from a loan as him and his wife were purchasing a property, and he paid his car off in cash at the bank, which is it's fine. Normally, if you want to pay something off, like speak with your loan officer first about how to do it. Don't just like pay it off in cash, because that could be suspicious. But he paid the car off, and the bank misreported the payment as late and not paid off. So he had a 30-day late that he didn't even know about on a car loan, and it tanked his credit, and it just made it like such a difficult scenario that we just removed him, and then the wife was on the loan on her. He's still entitled to the property, but it was just not. It did not work out. So,
Yeah, wow.
and it wasn't even his fault, which I felt bad for the guy. But
yeah, that isn't your fault. That's another thing where I don't know if you have that in there. Oh, you do. We're coming up to it. Okay, we'll get to that one. You can read this one.
yeah, they do not buy do not buy or finance any large price tag furniture before the house. Do not spend any money on any of the money that they are using to qualify for their home purchase, including down payment. Kind of the same scenario that you were just talking about. Even if you buy the furniture in cash, it could deplete your reserves. So whenever we have a purchase, sometimes we have to have what's called reserves. So let's say you're going to bring $15,000 to closing for everything and you're done, and you have 18,000 in there. Well, the lender might require you to have those reserve funds to be left over after the purchase of the home. So if you go and you buy a couple grand of furniture, you could not get the loan because you don't have enough reserves.
Yeah. So you've got to take a picture of what your loan your accounts are right now, and don't
Yeah.
make any big changes to it in the process. What happened with me when I was buying this house was and this drove me crazy, because I get odd checks. I don't get a standard payment every year, and
Mhm.
I don't get raises. I just get checks that I deposit into the bank.
Mhm.
Well, silly me, I deposited into this bank one time, and I deposited into this bank another time, and so I would say, "Oh, I got this check for 10,000," and then they'd say, "Well, no, you deposit $10,050. Where did that extra $50 come from?" And I was like going, I have no clue where that extra $50 came from.
Right.
On the day
Right.
before closing,
Oh my
the
goodness.
day before closing. Luckily, my sister was in town, and she goes, "Don't you get $50 when someone who you recommended sells a home?" And I went, "Oh, that's what it is." And I had to call, and we were doing this with this guy, Glenn, at 10 o'clock at night, the day before closing.
Man.
I
Well,
would
at least
never
he was
do it.
working with you, you know?
At least he was, but I wrote a scathing review. Okay, so here's the next one. Do not originate any new inquiries on your credit report. In other words, don't apply for new credit cards.
Yeah. Yeah.
So I
So
always tell people, if you go to Rooms to Go, don't give them your social security number,
right. Yeah, they're
because
not gonna keep it on
they're
file.
gonna go and open a credit card for you and say, "You've been approved for $20,000." And then
Right.
you're like, oh, great, and then you just,
Yep.
so
So every single thing that you do to your credit after we submit that credit report, if it's a new inquiry or if it's a new liability, we have to answer every single question. So if you go out to different places and you start getting these credit inquiries for furniture or you want to buy a car when the house closes, we're going to be asking questions and have to submit explanations for every single thing. So that's when you start seeing that loan officer come back and say, hey, I need you to sign this letter of explanation explaining what this credit inquiry is. Hey, I need you to sign this letter of explanation saying like where that money came from. So it's any large deposits or credit changes are definitely going to raise questions.
that brings us to this one. Not make any large deposits or transfer. Like, for example, if a relative gave you $20,000 towards your house,
Mm-hmm.
you either have, if you deposit it in the bank, you have to also provide a letter that says they're not going to, that this is not a loan, this is
Mm-hmm.
a gift. So
Yep.
one-time gift, because if it's a loan, they that changes your debt to income ratio.
Yeah, yeah. Then they have to seek out like what the payment plan is, and we can actually use secured funds as down payment, like if you did a home equity line of credit. But if you're taking cash out on a credit card, we can't use those because those are unsecured funds. They're not secured by an asset.
Here's an interesting question from Sharon. How soon after you purchase a new vehicle should you wait before buying a new home? I think you
So
have
I
to.
think that question should be how soon should you you got to buy the home first. Is that the way the question reads? No,
Uh,
yeah. So how soon should you purchase a home after buying a new vehicle?
yeah.
Am I getting caught up on that?
Well, how soon after you purchase a new vehicle should you wait?
You should buy
Because,
the home first.
well, yes, you
Yeah,
always should buy the
because
home first, but most people have a car loan out there, right? So, I mean, it's not
correct,
like we're telling you don't buy a new car,
correct,
but we're saying don't buy a new car and change your loan payments, um, you know, dramatically while you're in the process of getting a loan approved.
right,
So if you've got
right,
that 45 days and um, you've already purchased the vehicle, that's fine because everybody
right.
has a loan out on a car mostly.
Yeah.
But if you do it in that 45 days, that changes your debt to income ratio.
I would say like if you're on the fence about buying and
Yeah.
you're
Wait.
buying either one, right? Like car or house. Both are large purchases. I would say talk to the loan officer first and see like, hey, if I bought a car and my payment's $600 a month, could I still buy the house I want? Because that's the big thing is like we don't want to, no car payment and then all of a sudden we have to throw an additional $600 towards your debt to income ratio, which this game is it's won and lost by decimals. So I could get a loan done at 49.99% DTI, but as soon as it goes to 50, the deal's done. And then we have to either flip it to FHA, VA, or try to come up with solutions on how to drop that debt to income ratio down. So if you have questions, I would say like honestly with that scenario, if you're on the fence, I would probably just give me a call. If you're in state or out of state, I can definitely help you walk through that to see if one makes sense over the other.
So, yep, my thought is, do they ever does a lender ever even ask you if you own a car?
So, I get this a lot on loan applications. If somebody's like, if we're like, well, what are your assets? And they say, well, I have a 96 Honda Civic because this is real. I just got a loan application. The guy had a decked out, I guess he built this Honda Civic and it's like his race car. And he said it was worth like 15 grand. And I'm like, well, it's not really your asset. That is an asset, but we're looking at more in terms of cash. But the only time a lender is concerned with a car is if you have a liability on your credit report.
Yes.
Now, if you own property, they want to know what property you own because even if you own it cash, you're still going to have carrying costs on that property. You're still going
Mhm.
to have to pay the homeowners insurance, property taxes, possibly the homeowners association dues. So we have to add all of those to the debt to income ratio, even if you don't have the mortgage.
Well, that also brings up a thing where that's why I tell some customers that, you're getting a loan on this property, but the HOA fees are exorbitant.
Yes.
So
Yes.
you have to look at how much, are you paying the average like $75, or are you paying, $300?
Hmm.
You may be able to afford it because you've got another person who's not on the loan who's going to
Right.
be, but they're not on the loan. So it doesn't
Right.
matter how much they make. It's like
Right.
you have to look also at what the HOA fees are going to be too, because
Right.
they can sometimes be a lot. If, for example, lawn care is included in your HOA fees,
Hmm.
you guys don't care if I mow my own lawn or I hire somebody.
Right.
You don't go and say, "Oh, are you going to mow your own lawn or are you going to hire somebody?" "Oh, that's another $110 a month." You guys don't ask that. But
No.
if it's on a payment every month, then
Yes.
it's important. So it's
Absolutely.
also another thing is to talk about knowing that what the HOA fees could be. So
Right.
I usually give you guys my highest estimate, which probably, I think highest one was about 300.
Hmm.
That was for an over 55 community. So, yeah. But okay, so yeah, he's currently out of state. If you have any more questions, we're getting down to the last banner. Put up so if you want to get me, I get John. That's not you.
That's okay.
What the
No
hell did I
worries.
just do? Sorry. Oh, that was stupid.
All good.
Wait. Hold on. Let me get this up there.
I'm curious to see this system you got running here. This is pretty cool.
Oh, it is fantastic.
Yeah.
It's fantastic. Okay. So I could send you that information if you want to get in touch with Josh.
Yes.
But here's the big one that I think is really does. I have had buyers get into trouble with this one.
Hmm.
Don't co-sign on the loan for anyone.
Oh yeah, I'm not responsible. My daughter pays that loan. I don't pay that loan. Well, actually, you're responsible for it, so we still have to count it against your debt to income ratio or a
Isn't
house.
isn't that insane?
Yep.
I
Well,
mean,
I
that
co-signed
is.
on a house for my kid, and now I want to buy a house for myself, but now you have two mortgage payments because we have to
But
count.
you're not paying that mortgage. Your kid is
No, but you're financially obligated to it. So anything that you're financially obligated to, because if the person that is the primary borrower on that loan defaults, they're coming after you.
okay. Shireen wants your contact information. I will send that.
Thank you.
Casey saying, "Thanks, guys. I've enjoyed this. Very informative. Great." Here's a
Thank
good
you.
question. How fast are the rates going up for second homes?
So I have had a lot of very difficult conversations. If I could screen share, there's a website I reference to just get an idea on where rates are going. This would probably be helpful for you guys too. It's loansifter.com. So
Okay.
loansifter.com has a tab at the very top, a button that says view trends, and you can put in, you can see conventional 30-year, FHA 30-year, conventional 15-year VA loans, just like national averages on where rates are at right now. And you'll see in the
Oh, great.
last,
I've never even heard of that. That's
yeah,
fantastic.
loansifter.com.
Now, do you
They're
have
going
to
up
put
very
in
fast.
do you have to put in your email address when you do that?
Nope.
Oh,
Nope.
that's good.
Totally free. Nope. It's totally
Uh,
free.
I will tell you, because I always tell people you can always look online to get, an idea of what rates are and things like that,
Yes.
but always have a different email address that you will close out when you buy your house, because you're going to sell that address to everybody. So
Yeah.
it's called Loan Sifter.
Yes, sir. Yeah, so there's no fees, there's no sign up, there's no login. Loansifter.com and click view trends, and then it just you can look at the rates over the last 10 years, 2 years, 1 year, 1 month, 1 week. And it gives you an idea on where rates are going. So if you're in the market and you're wanting to keep an eye on rates, I would say that's probably the best resource for just a quick snapshot on where rates are at right now.
Okay. Let me see now. Who was Shireen? Okay, I'm gonna. Okay. Okay, I will get back to you, Shireen, with his info. Let me just. No. All right. So, okay. See, did we go through the entire? Oh, I think we missed one. Do not change bank accounts without documentation. That one surprised me.
Yeah. So we've had borrowers open new bank accounts. We've had borrowers move money from one bank account to a bank account they didn't provide to us. And again, it all goes back to just whatever your financial situation is at that moment. You just want to freeze everything for that 30 to 45-day window. If you open a new bank account, please save all of the new account documents because we can use it, but we just need to see, one, that it's a legitimate brand new account, and two, because we won't have statements, we need to see a transaction history, and then we'll need to source the funds from wherever that deposit came from. So I do want to say something about cash. If you deposit cash into a new account or existing account, we can't source that because we can't tell where that cash came from. There's very few instances where you can, like if you sold a vehicle and you write the amount down on the title and that amount matches the money going into the account. But after 60 days, so after 2 months of clean bank statements, we don't need to source where that cash came from. So if you're thinking about buying and you have money in a safe, money under the mattress, buried in the backyard, in the freezer, put it in the account now, and then after 2 statement cycles, we'll have clean statements, so we won't have to source where that money came from.
Cool. Yeah, I think it amazes me how closely they look at at all your income, all your finances. It really does amaze me. I did have an instance once, and I didn't handle it properly, where the customer didn't get approved for their loan and were angry with me because my lender was asking questions about the property they owned in Puerto Rico and how much money they made on it because they were renting it out. And she goes, I don't want to deal with that. We're just going to ignore that. And I was like, you
can't do that.
You can't. They're gonna find out. Yeah. They're gonna find out you have it if it's under your name. Do they research like how if you own other things?
Yes. So we I don't run this check, but the lenders all run checks on a program called Data Verify, and it'll pull up any association that you've had with properties indefinitely. So we definitely keep an eye on that.
Future. Okay.
Good. We were just talking about you because we were before we got on the call, we were kind of discussing some of the clients we were working with.
That's great.
We were just talking about how you were coming down, and we're going to hang out and really figure out the area you want to be in when you're ready to buy. You know who to call.
Right. Okay. So we're going to close up now. Thank you so much, Josh. I'm going to get to. I just wanted to make sure that question didn't come in from Shireen. I will get back to you, Shireen, to send you this information. So
thank you.
So any other things you want to add, Josh? Because we went over a lot.
Well, yeah, that's barely scratching the surface, but
I know.
I think I'll leave you with a saying we have around the office. I need to get some big old rubber gloves because when we start diving into these files, they're a financial colonoscopy. That's really what it boils down to. So as long as you're patient and you can work with us, we'll be more than happy to answer any questions. We try to make the process as painless as possible, but it is a very difficult process. It's not easy by any means, but me and my team, we've been doing this a long time. We've done a lot of loans, and we're very good at what we do. And all of my team is very well educated, so we'll be able to take care of you guys.
Well, I think that's what you really, I mean, people ask me questions about loans,
Mhm.
and whenever I go, "Oh, yeah, that's okay," I have, in the first couple of years of doing this, I realized I will never answer a question about a loan. I'll just send you over to the right person, or I
Yes.
ask you directly and call them back and
Right.
tell them,
Right.
so all right. So thank you so much for watching. If anybody
Thank
else
you, everyone.
wants um, Josh's information, will be on my Facebook page. We need like 100. Yeah, yeah. Oh, great.
Perfect. That's awesome.
Oh, here's a question. Isn't it better? Oh, yeah.
Yes, it is.
Yes,
Yep.
it is better to be pre-qualified.
That's right.
Um, absolutely. You know what? I will tell you, right, just to close this out. Um, and it's not so much in the 400 or 500 range. Sure, you can go look at houses without being pre-qualified, but you're doing yourself and your realtor a disservice, because the offers have to be in that day, and you
Mhm.
can't put an offer in unless you have a pre-qualification. And the thing is, like, I have one customer that I'm dealing with, who wants to get to a certain payment. Well, that certain payment is going to indicate what price they're going to be able to afford. So, um, the you know, so you want to stay within a budget, you have to know your budget.
Yeah.
And you can't do that if you don't go to a lender first. So, how soon here's a good one. How soon should you get pre-qualified? Before you look.
Yep.
Before you go out and look. I mean, I don't think it's a good idea to call up Josh if you're looking 2 years in the future, but he could give you an idea, because the thing is the rates are going to be different 2 years in the future.
Right. I do
There's
like to talk to those clients though that are a year, 2 years out, and take a look at their finances, because I do some coaching as well with credit cards and credit. And I can provide some free resources for clients, and potential clients.
if you find they have a problem that they're going to have to overcome in a
Yes,
couple of yeah.
because I've had it before when I was a new loan officer, green, and borrower said, "Oh, my credit's great, I make great money." Well, it turns out they were a business owner, and they wrote off all their income and all their expenses, so their net income was negligible, and they had terrible credit. And it's like, I worked with them for like a year. So it's better to get ahead of it, and then just kind of start thinking in the mindset of like good credit practices, good financial practices that aren't only helpful for the mortgage process, but for the longevity of your life. Really, I mean, good sound credit financial advice will stay with you for 6 months. Is not too early, Craig. That's actually a really good timeline. Now, I won't run your credit and dive into it, but you can visit annualcreditreport.com and pull a free credit report. And if I have that in conjunction with some documents, pay stubs, W-2s, bank statements, and we could go over all that. We can get a good idea on where you're going to be at or what you need to work on. And typically, I get this question a lot as well: is how soon can I get pre-qualified, or how soon can you issue the letter? I would say if you're under the gun, go straight to my website. I actually have a new website too, floridamortgagedude.com. It's a lot more catchy than that one. I just opened it up not that long ago, but
Oh, great.
floridamortgagedude.com has an online loan application, and as soon as you hit create new account, because you do have to create an account with this, we get a notification, so it's on our radar. And as soon as you complete the loan application, my loan partner dives right in and starts working through it, and we can typically get a pre-qual out same day.
Good. Okay. Yeah, because honestly, like I said, you can't put an offer in without being, because I have to submit your pre-qualification, really on top of the pile
Right.
of everything that, so
Oh, and I want to touch too. So when me and Victor work together on these purchases, We do some back end stuff. So I don't send the pre-qual letter directly to the borrower. I send it directly to Victor, but Victor tells me what property you're looking at and what the offer price is going to be. Because if you can qualify for a $500,000 house, but you're putting an offer in on a $355,000 house, we don't want the sellers to know how much you qualify for. So it also gives me the opportunity to look at the property and make sure, where are the property taxes at? What's the homeowner's insurance going to be, just to dial in that mortgage payment. And then when I send him that pre-qual, I've already looked at the property, and we match the offer price to your offer. So everything's cohesive. And if you have to renegotiate and increase the price, I just send him a new updated letter with the updated price. But I feel like that really helps with negotiations and kind of keeps the curtain pulled over on what you can really afford. So you're not paying too much for a property.
Well, what we had was an issue recently where now I thought the house was worth 300, but it didn't appraise at that for whatever reason. So let's say you have a property that appraises at 300, but you've put in an offer of 350. So you've been approved for 300, and you're putting 20% down, which is 60. You have to actually come up with that extra $50,000 difference if the house doesn't appraise. So anytime you put in a appraisal contingency that says I will pay over appraised value, that's going to come out of your pocket. But then it takes, like I had another one where we thought the house, we thought it wouldn't appraise, and it did. But I told them, if it could have gone 600 on this house, but it went to the 701. So anyway, but
yeah, it's the appraisals are you could do a whole video on appraisals.
I could, I could, but I don't want to talk to those guys.
Yeah, they're
Leave me
tough.
alone, anyway. But no, I should talk to appraisals because it's very interesting and it's very scientific, but sometimes the numbers that they come up with are just like, are you kidding me?
Right.
There's so much involved with doing an appraisal. But on the other hand, did you look at the comps?
Right.
Because I'm like, what I'm seeing is not like the house that I'm talking about I had shown 10 other properties to them. This was the best one out of them all. By far, it was the best. In great shape, everything. But it appraised like, I don't know what they were thinking.
Yeah.
So,
yeah.
All right. So, okay. Any other questions? Anybody else? And then we're going to sign off here. We went a little half hour over, but I think it was very good and very productive.
It's one of those topics where you could just talk. It literally, you could talk. I talk about it all day, and I talk about different things all day. So, hour and a half is nothing.
Yeah. Okay. Great. Thanks. So, wait, do we get a new comment? No. What happened? Okay, this is a good. What happens if you're approved? This is a good one. What happens if this is what I usually will call Josh and say, we're making an offer of 300. Give me a pre-approval for 300. Don't come, so yeah.
You want to hide that. You don't, obviously you want to be approved for more than what the sales price is of the property. But you don't want the sellers to know that, because, if the seller knows, like, the house, you could afford a $400,000 house and their house is 300,000 and you put in an offer for 280, they're going to say, no, they can afford a $400,000 house, 300. Like, we want our asking price. So it kind of protects your interest a little more when they don't know exactly how much you can be approved for. But you definitely want to kind of keep that close to your chest. Just like when Victor and I get appraisals back, we don't share the appraised value with the sellers, because they could get, if a house over appraises, which does happen in this market, they could get cold feet and say, you know what?
Oh, I would
I'm gonna
never do
pull
that.
back out of this. I'm gonna put it back on the market and I'm gonna sell it for more money.
I know. If something comes in at a higher value, I just say it appraised.
So
I play dumb.
yeah, yeah. So yeah, came in at value, or it didn't, and here it is. If it didn't come in at value, we usually got to prove it.
Yeah.
So with the minimum payment, that's more for like me, the loan officer. I can usually work with a budget. Like if you say I want my payment to be, $1,500 a month. I work backwards. So we figure out, okay, well, how much do you put down? So that doesn't include mortgage insurance because you're doing 20% down, or how much the property taxes and homeowners insurance. Is there a homeowners association in these neighborhoods you're looking at? And then we look at the principal and interest to see, okay, where's our range? And we can normally dial it in. So the minimum payment would be more so for me. It's really based on the property. But then like we can keep you around a payment that you want to be at. But yeah, there's no real minimum payments. So overseas sales, these are kind of tricky, man. Like
Foreign nationals, they call them, right?
yeah, we do have programs for foreign nationals. Lenders are very particular about this program. You can't work in the States. You can't live in the States. You can't have any American credit. They basically want you to just have a vacation home or an investment property here. And the way that they do these is they call it a debt service coverage ratio program. So basically, like the appraiser will come out, appraise the property, and as long as the estimated rental payment for the property matches or exceeds the mortgage payment, they'll do the loan. So it's no credit, very minimum assets. I was dealing with a guy in there's a couple of borrowers. I'm dealing with one in Canada right now, but there was another guy over in the Netherlands, I think, who was trying to move over here, but he couldn't because he had his visa to work here. So it wasn't a foreign national because he has his visa to work in the States. So those do get pretty tricky. But I do deal with a couple customers a month from overseas.
And you know what? It's funny is when it's cash, nobody asks you where it's coming from.
Nope, unless it's a lender.
If it's cash, you just go, yeah, there you go.
Yep.
Whatever you can pay for, it doesn't care. They don't care where you're from, anything. They
Yep.
never ask any questions.
Yep.
So I meant down payment.
Oh, down payment. I'm sorry. I thought you meant mortgage payment.
Yeah.
Yes. So minimum down payments. First-time home buyers with conventional loans, 3%. Subsequent home buyers with conventional loan, the minimum down payment is 5%. And then if you're moving into FHA loans, the minimum down payment there is going to be 3.5%. There's some intricacies to each program and which would work better for you. But basically, if you're putting less than 20% down on any program, you're going to have mortgage insurance. And again, depending on credit score and a couple of other factors, we can run through some scenarios to see which program would be best for you. Because, I mean, I'll be honest, I've had customers that want a conventional loan because they know if they do less than 20% down, they'll have mortgage insurance, but it'll be canceled once the loan to value reaches a certain percentage. But with remember conventional loans, the mortgage insurance is based on your credit score. So with a second home, it's going to be 10% down conventional loan. That would be, and again, like you'll still have mortgage insurance on that program, and it's going to be based on how good your credit score is.
So I'm just going to ask another. Yeah. So I mean, and one of the things that's coming up is if you've been, I like people to be able to afford something more, but stay well within their budget. Because
Right.
honestly, now I did have a customer that got approved for a $1.2 million house. And what happened was, and she was putting just 10% down. And I thought, I was like, my eyes were crossing because I'm like, you are like strapping yourself out. Little did I know that she anticipated a very hefty pay increase, and she got it, and now it's fine for her. But you
Yeah.
cannot work on that because we never know what the future holds. So I like to keep people well within their budget. So, you could always upgrade later on. You could always
Mhm.
get a bigger house later on, or downsize later on, but stay within your budget is very, very important.
Yeah.
So, okay, well, okay, well, thank you so much for watching.
Yes,
This
thank
is
you.
great. I will get back to the person that asked for your contact information, but I have it up here.
Perfect.
And okay, thank you so much. And loansifter.com. I learned something
Yes.
very important. I'm going to
Yes.
put that on my Facebook page. That's a great one. Okay, terrific.
Perfect.
Okay, great. Thank you so much.
Awesome. Thank you, everybody. Have
Yeah.
a good night.
Bye-bye. Thanks, everybody, for watching. I appreciate it. And here we go. Boom. Making the dream of a Disney lifestyle a reality. I'm Victor Naraki. Contact me on Facebook at Naraki Realtor or my website, celebratingflorida.com. Thanks for watching Disney at your doorstep.